Sandip Sabharwal is also joining us now on the show. Sandip, good morning. Sandip, what are your take on Max and Axis Bank? Yesterday, there was a section of the market which was busy shorting the duo, on reports that there could be some issue in the transaction, which they clarified to last evening. If on this particular matter the stocks come under pressure, would you be interested in any of them? Would you look at any of them favorably, Axis or Max?
Axis is something which we hold. It's been underperforming in the near term along with the rest of the private sector banking pack. And if there is a correction in that, I think it becomes more, I would say, attractive. I don't think much should come out of these whatever allegations are floating around because there's no personal benefit to be made by Axis Bank. There are no promoters as such. It's an institutional owned bank. So I'm not sure where all of this is coming out from. So people who want to be cautious, they can wait out and see what the courts say. But I don't think it should be too serious.
Sandeep, clearly seems like that banks ka time finally has come. Looking at HDFC Bank finally as well moving.
Yeah, so I think the management also has been talking to people and trying to assuage fears and all. And I think they're started to get some positive coverage after a lot of negative coverage. So there's a high probability that we could see a bounce back. But I think the bounce back will be shallow till the point of time some actual change in fundamentals plays out. But the probability that it could outperform in the near term has increased.
Bank as well seems to be quite the cleanup story. Sanjeev Bhasin was just talking about as to how Indiabulls Real Estate could be the next turnaround bet. Any of these names that you're looking at actively?
It's very tough to invest in these turnaround brands because the turnaround stocks sort of because see fundamentally Vedanta has big issues related to the debt. Now, when debt is an issue and interest rates are elevated and refinancing risks present themselves, then like companies like Vedanta or, for example, companies like UPL become very tough to predict because the debt issue can really blow out even if fundamentally it's stabilized. So I think that's the big issue I see with such kind of turnaround stories.
UPL has been
Indiabulls,
reducing
I
their
haven't
debt.
looked at.
UPL.
Just curious to get in your take on the entire infrastructure basket because if you look at the kind of data that we've seen in the last 1 month, a lot of these stocks have been at the forefront. What's your outlook on some of the names within the space and IRB and NBCC, etc., or your preference? I know you track NCC quite closely.
So I think on the infrastructure side now, what's happened is there are companies which have built up the order book. There are companies where order books are running out, and there are segments you need to choose. For example, the road segment order awards have been very muted this year. So almost 1/3 of the target. So I think companies focused on that segment. I think they have issues related to growth, which could come up for the next 1.5 years. But many other companies which are into the construction infrastructure space and have decent order book. For example, NCC, I think their results were very strong. Their debt levels are under control. So the huge re-rating has happened. So I think from here on, it will be more a earnings growth kind of story, 15-20% return stock. It should still be there given the order book of 60,000 crores, which is nearly 3 times of what the turnover would be. The other stocks on in these segments, capital good infra side, which we hold. One is VA Tech Webag. Again, the numbers were very strong. Outlook continues to be strong. And then the water segment and valuations still are cheap relative to fundamentals. For example, like I think it trades around 12-13 times next year earnings, 13 times next year earnings. So I think these two we own. Then we own Ahluwalia Contracts, where again the numbers are very strong. Again, they built up the order book in the prior to the election so that their implementation is not impacted, and the results were, I think, much above expectations. So I think these stocks should do well again going forward.
I had a quick follow-up with you on that one, Sandeep. VA Tech Waba, we've been observing it's one of its kind company operating in an area where, it's very difficult to operate in. not only domestically but globally. Why isn't the market giving it due valuation then? Is there a certain issues there which market would like to be resolved? What exactly is the reason, or understanding of the business model, or what else?
So the issues are that when a company goes through a tough cycle and it went into some problems in the past, so many people who invested in this company possibly looked at it and were disappointed by it. So then the confidence to come back takes time. So in the earlier cycle, so for example, there's one company which has not crossed its previous peak, which it hit, I think, 10 years back or something. If you put the long-term chart, you'll see it. I guess earlier peak was 950 odd. Then it used to do a lot of projects for the state governments. Its money got stuck. It had to take huge write-offs, etc. The interest cost ballooned. And now those things have got resolved. Now they focus on multilaterally funded projects. They are focused on cash flow. So from being hugely under debt, they have become debt free and actually cash positive. So I think it takes time for the confidence to return. The stock's done well. It's not that the stock's not done well, but still valuations are much below historical valuation. It used to trade at 45, 50 times P. It just trades at 13 odd times forward P. So my guess is both earnings growth and re-rating will happen for the company over the next couple of years.
Right. Okay, quite a bit of conviction there. VA Tech Vabag, and Sandip has been holding that for a while. Sandip, the other space, of course, which is shot up is the entire PSU energy pack, right? I mean, be it the OMCs, be it ONGC for that. And this amidst news flow that, crude has now jumped back to $83 to a barrel. There's always that windfall tax adjustment as well. And now we understand that, the windfall tax on diesel is going to be raised by another ₹1.50 litre. You've not traditionally been a fan of this pocket, but do you see value here now?
Not really, Aisha, because it runs on the whims and fancies of the government, sort of. So the government decided that they will not reduce fuel prices irrespective of where the crude goes, and that has boosted profitability of these companies. Tomorrow, prior to election, the government decides that we need to create some feel-good petrol, diesel prices are slash 5-7 rupees. The entire profitability paradigm goes into so it's very tough to analyze these companies. What people are reading into, and which might be right also, that the government is now focused on these companies being run efficiently. They should be profitable. Indiscriminate disinvestments will not happen. So I think that's the theory going around. But then these companies are the same what they were. It's just that right now they are having windfall profits. Whether they'll sustain or not, I don't know.
But in the meantime, wanted to get in your take then, Sandeep, as to how you're looking at the entire consumption space. What is it that's catching your eye within the entire mid-cap consumption pocket, given the fact that the concerns of rural slowdown seem to be imminent?
Yes, I think consumption is one space which is under-owned, where companies have not done well, and with now the predictions of El Nino ending and La Nina coming back, inflation being under control, I think the rural recovery along with urban should restart. I think many of the beaten down names should be considered. So, for example, I think Dabur at current valuations is pretty reasonably placed on the consumer non-durable side. On the durable side, yesterday afternoon, we were discussing about a company which we recently added called V-Guard Industries, which is on the durable side, where last 2 quarters they have shown recovery. They had acquired a company called Sunflame, where the turnaround seems to be proceeding quite well. And they seem to be quite upbeat on the outlook going forward. So I think this is one company which should do well. And Volta is something which I've talked of in the past, but then it's run up to a 52-week high. So at these valuations, I don't think it's attractive for new entry at this stage.
The big dhamaka from yesterday, sure enough, was M&M, and eventually settled with a 7% uptick on the futures alone. The cash levels for M&M as well, quite a bit of traction there. The stock is already at its life high. It's above its key technical parameters as well, and a big intraday breakout. Sandeep, while the tractor slowdown continues and the M&M management as well was categorical in pointing that out, but it's, I guess, the EV pipeline which the street is excited about. What next in store for M&M from an investor perspective?
I think M&M is one company which has always been underappreciated by the analysts in general and investors. It's not very well owned if you see portfolios of PMSs, mutual funds, etc. But the company is delivered strongly on new product innovation, delivery, new products, models becoming successful, etc. I think it will become a serious player on the EV ecosystem also. Even with the slowdown in the tractor segment, the result delivery has been very strong. And even at a 52-week high, it trades at, I think, mid-teen valuations. So my guess is that there is valuation comfort, and tractor sales will eventually recover going forward, I think, after a few months. And so then both cylinders could fire. So I would be positively inclined after stock reaches a 52-week high, whether you should buy at the same price, that price, or wait for a correction or not. That's anyone's call. But directionally, I would think that the stock still should have upside.
Yes,